Get countdown.
There we are.
Well, here we are. Welcome to the Market Huddle Live, the special kind of Christmas edition with Rupert Mitchell, author of the Blind Squirrel Macro Newsletter, and his buddy and mine as well, Paul Krake, author of View from the Peak. Welcome, gentlemen.
Hello, mate.
Hey,
Merry Christmas, everybody. Happy holidays, or whatever you
Yeah.
practice this time of year.
Yeah. So we picked a hell of a day to do this, 3 o'clock, as the Fed is talking, as the Powell's talking. But it's okay. He didn't really say anything, did he?
It doesn't look like. I think it's exactly on the screws in terms of what people were expecting. I'm actually quite surprised that the market is surprised.
Really? But I thought that his inflation and target had changed. Did you not? You're surprised that they're surprised?
Mate, I've just woken up. You're asking
I know,
one guy
yeah. So
literally just woke up.
Literally, Rupert is a real trooper. He gets up. He's in Australia. So what time is it there?
It's all right. It's just gone 7 o'clock in the morning.
Okay. Well, all right. So let's get to it. Now, one of the ideas of this is that we're going to let guests ask some questions for those who are interested in, and I guess, how do they do that, Daniel? Do they just put it in the comments?
Yeah, just literally put it in the comments, and I'll read them out if they're appropriate, and some of them if they're not appropriate.
But in the meantime,
Daniel, do we have guests, or are we just talking to ourselves?
You're just talking to each other, unfortunately. I'm so sorry.
Paul, you are the guest.
I'm the guest. So very nice.
Right. And so the reason we did this was because actually we first of all, Paul Krake deserves a lot of kudos, because out of all the people that got on our show and talked about all the different trades, he was one of the few that actually said you should buy the Mag 7. So first of all, big round of applause, Paul. Well done.
Thank you very much, mate. I was once referred to as the Tom Lee of macro, which I don't think, which says I'm perpetual. Apparently, I'm a permabull, which. But I was explaining to somewhere. Look, I'm a little bit bearish. I won't get into it now, but I'm a little bit bearish going into next year because I think tariffs are a problem, right?
Okay.
Someone asked me before at an investment committee meeting I was on. Basically accused me of always being bullish, and I said I think of this very simply at the start of the year. Since 1990, earnings have gone up 82% of the time. The S&P has gone up 79% of the time. I'm not always bullish, but if I'm going to flip a coin at the start of the year and it's 80% heads, I'm calling heads.
Yeah. But you deserve more credit than that, because not only were you were bullish on the right things, because you could be bullish on the market as a whole. And actually, that wasn't that great a call. If you go look at like the S&P equal weight, it hasn't done that well. It hasn't been that terrific a trade. It's really been concentrated in the names that you loved.
Well, mate, I've always had this. I've had this list for Rupert. How long have I had this 20?
As long as I've known you,
12 years. Yes, it's a long time. And I've looked at this, what are the top 20 most influential companies in the world? And I do this list every year. And I'm surprised how often it actually changes, because, if I'm doing this list back in 2014, Baidu, Tencent, Alibaba, they were way up there, right? But consistently what I find is that regardless of what the economic environment looks like, year after year after year, 13 to 15 of the top 20 most influential companies in the world are US domiciled. And that's me always making a place for Saudi Aramco, for companies like that. But we're talking about, is there any argument about buying Europe in 2025? And my question to that is very simple. If AI is the dominant narrative for 2025 and beyond, right? Which European companies are going to dominate AI? And one European company on the list, that's ASML.
Okay.
Right. That's it. And year after year, if you look at whether the narratives around, cloud or whatever the narrative, US companies dominate year after year after year after year. And that's how you come to that. Your very simple conclusion about owning the best companies in the US. Sorry, Rick.
Can we tie this back to Paul? To trade, Paul. I mean, if we do get this sort of big tariff bomb year ahead of us, isn't there a little bit of a soft underbelly in terms of the big giant US tech companies that don't pay enough taxes in the rest of the world. Is that something that's worth thinking about? I don't know what that looks like. I look at Ireland, sitting there being a tax haven to US tech, and think, ooh, people are going to get pretty bored about that pretty soon.
Well, I think you've got to look at it a couple of ways, right? There's the initial response, which is if you get look again, can we all agree tariffs are bad, right? The tariffs are bad, and that for all the funky math you want to throw out there, if you raise the price of imported goods by 20%, inflation's going up by something, right? Whether that's enough for the Fed to respond, we can debate that. But this whole notion that tariffs won't increase inflation is bullshit. It's just
I thought it was the most beautiful word in the dictionary.
That's right.
Mathematically impossible. So the first reaction, if you do get a tariff regime and agree that it's market negative, right? Because it does hurt consumption, it does hurt earnings, it does hurt that stuff. You de-risk, right? And what does everybody own, right? Everyone overweight Mag 7, right? Now, I don't know if what we're seeing in Nvidia and all this sort of stuff has anything to do with that, but that's a normal market correction, whatever. But at the end of the day, if you're going to de-risk equities, those things get sold first, right? So let's get that out of the way. From an earnings standpoint, an after-tax earnings standpoint, Brew, I think it's something that's a valid thing to consider. But are we in a world where, just as the Fed is not going to preempt policy change, they'll wait and see what Trump does. We as investors have to wait and see what Trump does because we don't know, right? We just don't know. So we're going to have to respond. So, are we better off selling highs today? Because we know that if the S&P and NASDAQ make a high, it's likely to make another high and another high and another high. So selling into momentum is a bad idea, right? Or do we just sell with the horde when everyone starts selling, when we get confirmation that France has slapped a 15% tax on Netflix, right?
Because we'll all be smart enough to get out ahead of the crowd, won't we?
That's right.
No, it's like going to be this mass funneling, and that's obviously the risk, right? That we all head for the exit at the same time.
So what do you think, Rupert? What's your reaction to that? Do you think there's any point getting out ahead of it?
No, but there's plenty. I'm not talking about shorting it, but why would you be on max risk? If you look at all of the positioning right now, you look at where the CTAs are, you look at where all of the hedge fund positioning is. Joe Retail doesn't need to be that person right now. And listen, the puts look cheap, but I'm not tempted yet. But I'm just gradually selling stuff, right? Apart from the stuff that's down a lot, which I can't face selling right now because at some stage, there will be some kind of revenge by the atoms.
You think that energy might actually rally at some point?
That's at some stage. Listen, I'm not massively bullish crude right now, but I think, the energy related equities just look way too cheap right now.
So Paul, what do you think in terms of, we've seen some real pain in the factors and like movement within the market, and a lot of pros, like a lot of retail, will look at the market over the last few days or the last couple of weeks and say, it really hasn't moved that much. It's been pretty boring. But for the pros, it's been an extremely painful 2 weeks, right? The Mag 7 has gone straight up. All the value names have gone down. When you look at kind of internal things, we're getting, 2, 3, 4 sigma moves in terms of these factors. Is that just a function of people that were underweight Mag 7 going into year end, fixing their books?
Mate, I think I look at it slightly differently, right? I think we're having this Trump trade conversation 6 months too early, right?
Okay.
Because if you think about implementation, if you think about the inflation impacts, if you think about the Powell response to inflation, which for me is the most important thing that we'll discuss, that needs to be discussed. How does Powell deal with exogenous inflation? With transitory inflation again, right? We're going to have that debate again, right? So how does he, once bitten, twice shy, does he have to respond? These are all things you have to consider, right?
Right.
So, but if all of the consequences of Trump policy, right, aren't going to take effect to the second half of the year, then doesn't the growth hit happen in the second half of the year and beyond? Doesn't the earnings hit happen in the second half of the year and beyond? doesn't the rotation happen in the second half of the year and beyond, right? So if you're thinking about this, whether think of it as dogs of the Dow or all these older sort of trading balances that historically have worked. I think the trading community was just had the Trump trade on, and there's an appreciation that the Trump trade may take time to play out. Right?
So again, were you talking 6 months from pre-election or 6 months from now?
Because 6 months from now. Let's round it down. We're a month from inauguration.
I think that if you look at how some of these tariffs in particular can be introduced literally by tweet or by truth, that we
by executive order, we might have on day 1, Jan 21, we could have a bunch of tariffs.
We're much closer to that event horizon, right?
Yeah. Well, we are, and that's true. But is the problem the tariff itself or the retaliation, right? Because the retaliation is going to take time because the Europeans aren't going to get their shit together to be able to coordinate this, right?
Listen, us Canadians, we're already ready. Our Ontario Premier has put together his list of things that we're going to tariff and the things that we're going to cut them off on.
Rupert, they call Toronto the Brussels of North America, right? So so Kev's probably in a better position to actually act like a Belgian politician. So you get a letter. So France, you get a letter from Donald Trump that says, by the way, we're putting 25% tariffs on all European goods, and we're going to link it to NATO spending, and we're also going to link it to a peace deal in Ukraine. And Franz over there turns around and says, which department do I send that to? Do I send it to the diplomats? Do I send it to the trade advisory? Do I send it to the defense ministers? Do I send it to the finance ministers? So any response that comes from Europe is going to take forever, right? Again, Ru, you know this very, very well, right? How long did the responses take in 2010 and 2011 to Greece? It was and again, Merkel driven, admittedly, she's not there anymore.
I remember you live blogging from Athens.
I will never get those 3 weeks back.
So, Rupert, do you agree? Do you think that it's going to take them a long time to react?
Of course, it's slow. I mean, it's a group of 27 countries that have to speak as one. It's obviously going to be slower, but I actually
is that is that the real problem, or is the problem the tariffs on the U.S. side? Like, is it really like Paul made the comment that it has to do? It's the response that matters, and that's the real pain.
But until we know what the response is, everyone's going to think the worst, right? So I don't think it goes response free, right? I think Paul wrote something very interesting a few weeks ago. I think that there is a reasonably easy fix, which revolves around LNG, right?
Paul, why don't you tell us what that is?
Paul outline that.
Trade deficit, the trade deficit between Europe and the US is $130 billion. Okay. That basically goes to zero if the Europeans agree to buy $10 billion a month of natural gas.
Yeah, okay, but fair enough. But if that's your only goal is to fix the trade deficit, that's fine. But is that his true goal? Is it his goal to fix the trade deficit so he puts mid-America to work?
Yeah, but I don't think he's taking German manufacturing jobs. He's looking for Asian manufacturing jobs.
But so I have this debate all the time. Like, what is his goal? And to Paul's point, we actually don't know. The reality is he says a lot of stuff. So whether he truly is trying to put mid-America to work is still up in the air. And I think we're going to know a lot on Jan 21 or Jan 20, whatever the day is, because you're going to see how serious he is about tariffs and about all these different things. And I'm just kind of the opinion that if your goal is to put manufacturing back to work, like mid-America manufacturing back to work, that's at odds with a higher stock market. And I don't think people truly have kind of got their minds wrapped around that yet.
Well, Kev, I think there's a couple of things to think about here. One is why does the US run trade deficits with the rest of the G19? Like, why do they? And the best charts that I have seen on this is if you look at the spread between GDP per capita of each country in the US, that has gotten wider and trade deficits have gotten wider. America's rich. American consumers are richer than everyone else in the world, and hence the reason the deficits are big, right? So we can argue whether or not any of this actually will work long term. I would make the argument that Trump is after a win, right? And that Trump doesn't want to be viewed as the US getting screwed over, and his metric for the US getting screwed over is the trade deficit, right?
Okay.
So if you can shrink that trade deficit by any way you can, right, then that's a win for him, right? Whether that leads to manufacturing jobs coming back to the United States, do you really want them? Right?
I think he does.
I get why you want semiconductor plants, right?
I think he
get why
does.
you want chip manufacturing, but do you really want to bring back low end?
Well, listen, I think people that voted for him want them.
Correct.
Right? Very
correct.
Different.
The people that put him in power want them.
Want better, but what's the do they want those jobs, or they want better jobs, a higher paying?
I'm sure they would want
higher paying jobs in manufacturing. Higher paying jobs in manufacturing are sort of they're sort of mutually exclusive, I would argue.
Yeah, listen, I understand the argument. I just think though that he's come to, he's campaigned on China's taking our jobs. All these, factories have left because they're going to China. We're going to get those jobs back. Now you're arguing he's going to have a whole new bunch of jobs, but so if he puts a fab plant in the middle of America, are you going to be able to get those people to work that used to be working on the tractor plant to work in the fab plant?
No, but this is, and again, there's no, these are concepts, right? You're not going to train, an ex-oil and gas worker. You can train an ex-oil and gas worker to go work repairing wind farms, right? That transition can occur. But you're not sending an oil and gas engineer and turning them into, the guys in the white suit in the fab, right?
Right. And I think that, though, do you not agree that Trump at least campaigned on bringing back those jobs? Now, you can argue he's not really going to do it. And at the end of the day, he's going to choose corporate America over those jobs. But if he is true to his word about what he's trying to accomplish, then the market is got a rude awakening coming for it.
Well, here's what I push back. I think that again, I think it's got to be very general, and I think his approach is as follows: you get well, let's word it like this: you get overseas investment into the United States, or you get American companies to bring that investment from Asian supply chains, for example, back to the US. That will create jobs.
Okay,
right? It will create jobs. Now, what are the quality of those jobs and the like? Who knows? I mean, so SoftBank come and announce $100 billion investment into the US, right? Right. Whatever the heck that means, right?
Last time they said that they spent 30% of it on WeWork. Good work, fellas.
Yeah, well done. Well, at least these workers will have a desk. But no, I think. Look, again, I think that there's. Kev, I want to go back. Why do you think that's necessarily negative for the stock market? I know tariffs are negative for the stock market. Why is onshoring negative for the stock market?
Well, because if it was positive for these companies to manufacture these things in the US, if it was economical, they would already be doing it. So in essence, what you're asking corporations to do is to engage in manufacturing that is uneconomical.
Let me give you the bull case about that, right? So the bull case is that in the era of AI, enhanced robotics, automation, that the factory of tomorrow didn't exist 3 to 5 years ago when Apple had all its supply chain in China predominantly, right? But the factory of tomorrow will hire less people, right? But it will be incredibly automated, incredibly efficient, and may not. And if you take transportation cost into account, right, you can produce goods here in the United States potentially at comparable costs than you can in other parts of the world.
Okay, so now I've heard this argument that that people say right. So people say that China is going to take their technology that they currently have in China and bring it to the US and apply it here. And
well, no,
no,
remember, China still uses a very cheap, relatively, obviously much more expensive now than it was. Labor force is still dominant. But I'm saying if you brought the factory of tomorrow here to North Carolina to build furniture, you won't have the same number of people, right?
Well, it's not just the factory or the fab, right? You've got the whole tier 1, tier 2, tier 3 supply chain around that.
Yep.
And that the replication of that is what I call BS on, because you can't we're going to retool a GM plant in Michigan to make BYD EVs. Okay, well, who's supplying that plant, right? Where is that sort of sub-tier OEM base coming from? And that just does not happen in a one-term presidency.
And not only that, why does China bring that technology here? Isn't that what happened to the American manufacturing? We sent it to China. They took the technology and then made it better. Why would China make the same mistake?
Actually, you know what? If you're talking about auto, they didn't actually. And part of the reason that they pivoted towards EVs is because they were constantly playing catch up on ICE technology. And then they went, okay, fine. We're going to skip ahead and lean into the EV powertrain.
Right.
Okay.
And Kev, I mean, Rupert's making a very good point, and to make it a bit more general. The reason that China dominates the global supply chain is because China's better at it than everybody else.
Yeah.
Right. And the country that's going to find this out the hard way is India, because they're going to try to replicate this, and you can't catch a train from one coast of India to the other, right? How do you replicate the Chinese supply chain? And again,
you can't do that in the US either, by the way.
Yeah. Well, you know what the problem is? That you Brits were in India too long, and that's the problem. Too much. You gave them all your bureaucracy. Okay, so listen, Paul made this great piece where you had how many questions did you had? Things that you wanted to know. What was the title of it?
It was 50 questions for 2025, aka I didn't want to put it in paragraph form.
Okay. So what we're gonna do is we picked some of the fun ones that we're gonna do, and we're just gonna start rifling them off. So let's not get bogged down too much, and let's kind of have 30-second to minute answers. And what we'll do is ask both of you for your kind of comments. So I'll start with the first one. Does a U.S. recession expose cracks in the private credit, or is this another overblown narrative? We'll start with Rupert, because I know he's probably going to be negative about this.
Listen, I think there'll be cracks, but I'm not necessarily sure that you're going to see them. Right? I mean, ultimately, the whole point of the private credit market is it can remain as private as they were, as frankly, both the GPs and the LPs want it to be. So, it's inevitable that a lot of the world of SME is going to be struggling to fund these loans at high single digits, early double digits. If we face any kind of economic headwind.
Okay. What about? Oh, sorry.
But ultimately, the whole point of private credit is to protect people from their marks.
Okay, Paul, what do you say about that?
Well, I'll put my rosy hat on and say it's not protecting people from their marks, Rupert. It's allowing corporate management the time that they need to succeed in their business models.
Bless you, Paul.
There we go. There's my goal. No, but no, I think. Look, I think there's a lot of money going to continue to flow into private credit. I think that there is. I think the preference is private credit over private equity at the moment, because this whole notion that there's somehow going to be an IPO boom in 2025 is complete rubbish. If you didn't have it after a 30% S&P year, it ain't happening next year, right?
Okay, got it. Will copper's long-term supply-demand mismatch finally be rewarded? I'll start with you, Paul.
I hope so. So Kev, I think about it this way, that. Look, as you know, I am very, very bullish on the whole renewable energy, clean energy transition. I'm probably of that trade. I'm probably less bullish on the nuclear side of things, which I know there's a lot of advocates in your world. I think copper is an essential part of this of rejigging of electricity grids. It's of rejigging. The electrification of industrial processes. We don't produce enough copper. It eventually supply and demand wins.
Oh, how about you, Paul? Rupert, what do you think?
Well, it's got to work for the whole electrification narrative to work, because no one's going to be digging holes in the ground until this copper price is well into the $6-7 a pound. Right?
What about
In
the
terms
idea,
of
though, that
emission-
Trump's going backwards in terms of electrification?
But it's not just EVs, right?
Okay.
Ultimately, in terms of rebuilding grids, in terms of keeping the Silicon Valley bros happy with their power-hungry data centers, that all needs sort of grid transformation, and it needs copper.
Okay. I'm going to keep it going. Can anything rejuvenate electric vehicle demand? I'll start with you, Rupert.
Listen, I think the hockey sticks were always a bit mad, and they are definitely facing an interim challenge from hybrids, definitely. And I think it's going to be it's going to be a luxury product rather than a necessity product in the West for quite some time.
How about you, Paul?
It's a rich like most Democrat voters, Kev. It's a rich inner city Whole Food shopping product. It's not a mass market. It's not a mass market product.
Okay, here's one that I like. Does China remain the sort of value trap that mired Japan for several decades? Paul, we'll start with you.
Absolutely. By the way, you notice in that one that didn't have a question mark. That actually had an exclamation mark at the end of it. Absolutely, they are facing the similarities made between the balance sheet recessions, the balance sheet blow up that you had in Japan that mired, Japan in deflation for 2+ decades. I don't see Xi Jinping being a Koizumi or an Abe type figure that gets them out of that.
Paul, I mean, do you agree?
Absolutely not. That's why I was smiling. I'm on the other side of this one with Krake. And what's quite as interesting, we were moaning earlier about the value factor sucking this year in US equities. Value factor in Chinese equities, completely different story. Value's crushing it in the MSCI China this year. I'm pretty constructive on China. Yes, I agree that valuations can be a trap, but I think that the market's been effectively equities have been underwritten for Chinese investors over the course of the last few months through the messages that's come from the authorities. They need to transform the savings culture domestically. Now, I'm not saying that the Canadian pension plan is going to start re-upping their allocations to China anytime soon, but Chinese investors are going to be buying Chinese equities, and I'm bullish.
Okay. I'm not going to go to another question. Let's just stay on this for a little bit. Paul, you think that it's, in essence, you're arguing that China is going to make the same mistake Japan did. Don't you think that knowing the Japanese mistake will be enough to stop them from making it?
Kev, Rupert's heard me say this more times than anyone. I have been looking at China for close to 30 years. I still don't know if Chinese policymakers are the smartest guys in the room or the dumbest guys in the room. I still don't know the answer. I still don't know the answer to that question. And I think that they certainly know the Japan experience and they've worked through the Japan experience, but has it stopped them from making many, many similar mistakes to what the Japanese have done? The one thing the Japanese did, which probably prevented a crisis, but made this process completely elongated, was incremental approaches to policy. And no one does incremental policy better than the Chinese. And I can't see, again, I go back to this point, that the reason that Japan got out of its mire through a couple of steps was having two prime ministers, Koizumi and Abe, eventually getting them out of the problem and changing the mindset. It took 25 years, and Xi Jinping is not that person.
Okay, fair enough. I get it. I would kind of, to echo Rupert's point, I'm actually more in his camp. I think that they've in essence written you a put right now. And in terms of the disappointment that we've seen since the fabled Tepper moment when everyone rushed in and overpaid for Chinese assets, I think that if you're sitting there and you're, Xi, and you're stuck with Trump coming to power in, 3 weeks or a month and a half or whatever it is, you wait, you don't shoot your wad, you see what happens. And so I completely think that we're going to see more stimulus on the other side of the Trump tariffs.
But
and not only that,
this is a Chinese Communist Party that did less stimulus on a GDP per capita basis than any country on the planet.
No, in COVID, that's correct. But
Communist Party. We view them as communist, and they did nothing very little to support their economy during COVID. Why do we think now that they'll do something extraordinary when they're at the back end of this?
Well, first of all, wasn't that the result of doing too much in the GFC? Wasn't that the result of Xi seeing that when they saved the world the last time, there was all this corruption, it created imbalances, and he's like, I'm not going to do this again?
100%, but the corruption side of things was sorted out when he came to power. That was the first thing he dealt with, because he got rid of corruption, but also got rid of all his opponents at the same time. It's amazing how the anti-corruption campaign and his opponents were the same people. It was remarkable how that happened. But mate, time and time again, they continue to do incremental steps and do less and less and less and less. Right?
Okay. Well, take it back to electric vehicles. Was that an incremental step?
Very much environmental, as you know, very much environmental in pollution.
Well, there are three pillars: energy security, air quality in the coastal cities. But it was strategic. It was industrial policy at a monumental scale.
Right, and Rupert, you're 100% right. And they have done in terms of infrastructure and clean energy, EVs, infrastructure, airports, all that stuff. Incredible job, right? But those things don't drive the market, right? And what has happened to Baidu?
They haven't cared about the market until then, right?
They've now decided they care about the market. What makes it think he will now? If the market was part of that process,
hasn't he told you that? Wasn't that part of?
Words of one syllable. He parades people out 3 times a week to say you can buy equities now.
Is it changing, Mr.? Is it changing the Chinese household balance sheet?
Well,
now again, the bull case is the Chinese household balance sheet has 6%
buying apartment 2 and 3 as a piggy bank, right?
Right.
He needs to stop, and ultimately he needs to diversify household savings. And there's $10 trillion worth of household savings right now, earning 25 basis points.
Rupert, that's the same argument you made in Japan. We can make in Japan in 1998. Right.
Yeah.
And nothing changed. And that's
but the Japanese weren't saying you're good in the equity market.
We didn't understand it. We didn't understand balance sheet recessions.
But the Japanese were intervening in the equity market in 98.
But we didn't understand balance sheet recessions. I would argue that we were all stuck on monetary stimulus and we had no idea the difference. Very few people understood the difference between fiscal and monetary. Every time the Japanese economy got going, it was all the likes of all the Western economists said, oh, you better raise rates, you better raise taxes because you got to pay down your debt. And it was this stop-start that just continually sent it lower and lower.
Remember when austerity was a good idea?
Yeah. Right. And then
I got to repeat my favorite line about austerity, which is Alexei Sayle, the British comic. There are a lot of people that blame the global financial crisis on there being too many libraries in Wolverhampton. Just love that line.
Here's a question for you both. Where do you think CNY ends 2025?
Ooh.
Rupert?
Oh,
I've got a live bet on with this one.
Okay.
With my buddy Ben Bry. I think there's a good chance it has a 6 handle. I'm just not sure how far down in there.
Okay, let me just pull it up because I don't actually know where it is right now. Let's just pull it up. So it's got a 7 1/4. So 6 handle would mean strength in the renminbi.
Stronger RMB by the end of the year.
Yeah. What about you, Paul?
I say 735. Oh, so not dramatically higher, but higher at the margin, because I think the dollar's stronger over the course of the year.
I go back to this thing about Trump, and the reality is that a lot of the problems that he's describing in terms of the hollowing out of America gets fixed with a lower US dollar. And ultimately that is going to be, although he mouths words about being the reserve currency, ultimately what he really wants and what he really thinks is the problem is a renminbi that's too low and a Japanese yen that's too low. And if you go listen to Lighthouser and you go and assuming that Trump is going to follow the Lighthouser playbook, then he's going to demand that there's going to be a revaluation higher. So I'm going to take.
I don't see how tariffs and a weak dollar are compatible.
Tariffs and a weak dollar. Oh, I think he's going to try to negotiate a weak dollar. And not only that, I think
there's a Shanghai Accord.
Yeah, like what they call it tomorrow. I think it's our buddy Louis Vincent talked about the Mar-a-Lago Accord. The other thing I think is that once you start tariffing, let's just imagine that he goes hard on China. What does China do? They go, well, you know what? We're going to tariff the stuff we buy from you. What do they buy from the U.S.? Not that much. Like it's not like.
Well, mate, remember back at the first trade deal that they did had a bunch of, when they announced it in, correct me if I'm wrong, it was January 2019 was when it was announced, right? And as it went to kick in, it was about to kick in 2020 with massive soybean purchases, wheat purchases, and the like. And none of that, and obviously all that went to shit, right? Because they didn't meet any of the targets, right? So whether it's agricultural again, who knows? Just as an aside, Kev, I think it's intriguing, and this is a bull case for markets and a bull case for the people who think that tariffs aren't going to be that bad. Lighthizer doesn't have a job currently.
No, fair enough. Understood. Now the question is he like Bannon, just whispering, and doesn't like care to have an official job?
No, because this was a guy he's a diplomat, right? He's U.S. trade representative. He was a U.S. trade representative. He's a serious.
And the other question is Lighthizer doesn't have a job because he's not willing to go hard enough. He's like, listen, you can't do shit like this. And Trump's like, you're going too small. You're thinking.
Or does Lighthizer not have a job because Scott Bessent has influence?
Yeah. So
hang on. I listen. None of us know, right? Yeah. But I would suggest that one thing, Lighthizer has got his guy sitting in the seat.
Oh, right? That's true. Yeah.
And he is very much in the mix. And he also, and I think most importantly, has a very good chance of being the last guy in the room, right?
Who's his guy in the seat? Who's the guy in the seat?
The trade lawyer who was his 100% protege that's gone. I forget the name. And I think he's got a really good chance because he hasn't got an official seat. He's not going to be on the airwaves the whole time, and he's not going to be stealing any thunder or any limelight. And so he's got a really good chance of being the last guy in the room, which we all know is particularly important with this president.
And Paul, I'll just say one more thing in terms of like, if we go into a trade war with China, let's face it, I think that the equation so far has been America buys Chinese stuff and sells them overpriced financial assets.
Well, mate, let's go back. We've had a trade war with China. We've had a trade war with China since 2017, right? Things did not get easier under Biden for China.
Agreed, right? But I would argue that this is going to be a more aggressive form. And if Trump is truthful to what he says, and like you could argue that this is all just negotiation, and he's not going to do these things, and I would kind of push back against that and say that could very well be, but that's already in the market. I think the surprises will be that he's going to be more aggressive, more serious, and that you should take him at his word more than the market is taking him at his word.
I think the market is currently pricing a very passive response to tariffs, as in the market is being very blasé as we are today about what he will actually do.
Correct. So if that ends up being correct, which is what you're arguing, I think it's already in there. So I think the surprises are that it ends up being the other way. So if you're right, I go, okay, market's already priced that. If I'm right, it's like, holy shit, this is a big deal. Okay, next question. Can Scott Bessent ease market concerns about tariffs, or is he fully on board with the Trump tariff agenda? We'll start with you, Rupert.
I don't see a guy in Bessent that's ideologically on side with tariffs. He's basically someone that sits. He's spent 30 years having the same conversations that we all love to have every day, and so I don't think that this tariff-led policy sits easily with his philosophy. Just a personal view.
Okay, what about you, Paul? What do you think?
Yeah, but as the only person in this room that Scott Bessent has threatened to sue, I think I'm quite passionate about knowing, and that's a story for another time.
Well, I don't know. I'm not so sure about that, but go on.
Oh no, you got to spill that, buddy.
Look, he hired one of my. I sent a guy to work in Australia with Cindy Rupert, with my business partner Cindy Ponder, and this guy went down to Australia, partied his ass off for 3 months, and then resigned and worked for Scott Bassett. And I said, Scott, I rang Scott and said, Scott, that's not kosher. We have him under contract. And his quote was, to paraphrase, "Go ahead, I'll fucking sue you." I don't think he said it like that, but that's where. So hence the reason I'm the only guy who's threatened to be sued by the Treasury Secretary. But no, I think that there's a couple of things. I think regardless of who he is, right, in the first Trump administration, Trump hired some serious people, right? He hired Gary Cohn, he hired Rex Tillerman, he hired a bunch of these people who were all by themselves qualified enough to stand up to Trump, and all of them fell by the wayside very, very quickly, right?
Okay.
Now, I'm not here to say that it's different this time, not different this time, and the like, but at the end of the day, Trump's the boss. And if Trump doesn't get what he wants from Bessent will do what Trump tells him to do.
Yeah.
Right. This isn't the tail wagging the dog.
I completely agree. I see this like Trump says.
My point was that I think he's playing along right now, and it doesn't mean that he's going to get his way.
Got it.
I'm best. That is, yeah.
All right. And just a reminder, if anyone has any questions, throw them in the chat for Daniel. And in the meantime, let's keep going here. Can the EU avoid a recession in 2025? Can the EU avoid a trade to sub parity in the USD? Rupert, what do you think?
Oh, I'm desperately tempted to start nibbling at the euro here. Aren't we already in recession in parts of Europe anyway? I mean, we've got this weird situation whereby you've got the periphery that's doing quite well, and you've got Germany and France sucking wind. But I think the negativity around Europe is getting close to overdone, and there are things that I'm close to getting excited about. Put it that way.
How about you, Paul?
Rupert, do you want my other 29 seconds? No, Kev.
No, they can't avoid a recession. So you think it's coming? We're headed a lot lower.
Think so.
Yeah, but define recession. So Paul, PK, define recession, right? Are we talking about EU 27 wide negative growth? What do you?
I think, well, again, if we obviously it's a it's an aggregation, right? So is Poland going into recession? Probably not, right? Is Spain going into recession? Yes. Is Italy going into recession? Probably. But again, if you've got Spain, Germany, France, and Italy in recession, I think we can describe that as a European recession.
And what about the euro? Where does it go? What's the
number?
number?
The euro goes below parity. I do.
You do.
I just don't see the reason to be owning the euro, mate. Particularly where, and there's a scenario where it gets ugly, right? Where Europe's in recession and the Fed's hiking rates because of inflation.
Do you think
it's again late second half? Maybe that's late 25, early 26, but that's a scenario late 25, early 26.
Well, do you think that Trump fires Powell if that's the case?
Oh, I think, mate, sorry, I'll get to that. I think Powell's damned if he does and damned if he doesn't, right?
Oh, fair enough. But does he actually fire him?
Four scenarios for Powell, right?
Okay.
You get inflation and he does nothing, and you have 2022 all over again.
Okay. You
get inflation and he hikes, and you have 2022 light. You get no inflation and he hikes, and you get 2022. You get no inflation and he does nothing, and the S&P goes to 7,000.
Right. All right. What about you?
And either way, if he and Fed took a massive reputation hit by calling inflation transitory in 2021.
Right.
If he does it, can he really do it again, or does he have to hike at the first sign of 100 basis point uptick in CPI? I can't see how he lost so much egg in his face by calling the last supply side shock transitory. He gets another one and does it again. If he does it again, if inflation goes up, he gets fired. If he hikes rates, he gets fired. Well, I don't know if he gets fired, but his life is miserable. Miserable.
I mean, listen, we were all chatting with each other instead of watching his press conference this afternoon. So I don't know if you've seen anything float over your screen on that topic. I thought his digging in at the last press conference about how he would not bow to any kind of political pressure to leave before his time was interesting. I wouldn't want his job. I incline to think that he's probably going to hike earlier than last time, right? That's a weak, mealy-mouthed statement, but I don't think they leave it as long.
And how does Trump respond to that?
Exactly, that's the next question.
With furious tweets.
Is it just all talk, or does he actually do something?
With furious tweets.
Yeah. Okay, next question.
He's already got the legal advice on his tenure, right?
Yeah. Okay, but the thing about that, and I always think this is funny when people go, well, I got the legal advice. Doesn't Trump go, I got legal advice that it's the other way around? Doesn't he fire him? And then what does Powell do? Does he go fight it? Like, you know what I mean? Like, at the end of the day, if Trump wants him gone, he'll be gone.
That'd be an ugly day in the Treasury market, wouldn't it?
No, Kevin, don't worry. Kevin Walsh is going to sit there to say,
God, that's the stupidest thing I've ever heard. Kevin Walsh is often more hawkish than the existing treasurer, like the existing Fed chair. Powell, Trump's never going to pick Walsh.
Oh God, it's about Walsh the biggest. Pardon my language, the biggest kiss ass of anyone I've ever seen. It's just shameless what he's doing with trying to get this job. Shameless.
Okay, so all right, next one. Does SpaceX go public on the new Texas Stock Exchange? Rupert?
I'm not taking responsibility for that.
Okay, Paul, then. Paul, what do we
Yes, absolutely it does.
Well, first of all, why does he go public in the first place? Doesn't that just introduce a whole lot of problems in terms of paying himself $1 gajillion?
Oh, I think he, not with the valuation of this thing. I think he makes a squillion out of it. He wants to launch the Texas. He wants Austin to be Austin or Dallas to be this financial hub. I think that is a pushback against the establishment like you wouldn't believe. The Texas Stock Exchange is going to open, right? It's going to open. It's going to have lax listing rules. SpaceX could launch. He's still got to file an SEC registration statement, Paul. We've got 14 stock exchanges. It's pure PR. Now, I don't believe he's going to take SpaceX public because, it's been pretty boring for Tesla having the scrutiny of public disclosure. And the private markets are working just fine for him right now. Even employees of Morgan Stanley's offering margin loans to SpaceX employees on their private stock right now.
Wow.
Yeah, that hit the headlines this week, right?
And mate, look, Databricks goes off and raises $10 billion in a Series J, which I didn't think there was such a thing.
Mate, we're gonna have ZA rounds fairly soon with companies like Stripe.
And right? Again, I know I'm arguing against myself, but if Databricks can borrow that amount of money, right, to basically buy out staff stock, right?
This goes back to this earlier point. Why has there been no IPO boom this year off the back of this move? It's because most of these unicorns have been marked at exceptional numbers, whereby a public markets IPO would be a massive down round. And, ultimately, I think the world is gradually waking up. Sorry, I'm going to be boring. Kev and I have talked about this before, but I think the market is gradually waking up to adjusted EBITDA and voodoo accounting. And in a world of high nominal interest rates, you cannot carry on misrepresenting your real operating cash flow, right? By deducting stock-based compensation is the big one, obviously. And so ultimately, I think we are moving into a paradigm where people are going to say, you know what? I'm going to start looking at GAAP EBITDA again now.
But Rupert, let me push back a little bit on that, because that makes the assumption that private investors are stupid and public investors are brilliant. right?
I'm going to say that the allocators to private investors have been really stupid. Well,
they look at the same. They look at the same. They look at the same things. I'll think about it slightly differently. Right?
This is all about the volatility laundering, right?
Well, no, that's true.
This is all why Millennium and Citadel are so successful as multi-strategy hedge funds. They offer low volatility. Now they actually manufacture that low volatility, whereas the private guys just make the fucking thing up.
Right, but at the end of the day, right? There's a couple of things here. One is that worst job in the world, CEO of a public company, right? Horrible job, right?
Oh, he's compensated pretty well for it.
Compensated pretty well, but it's a
last week wasn't
pain in the ass
risk.
to be a public company, right? It's a pain in the ass to be a public company. Secondly, is that despite all that talk about vol harvesting and the like, there are still fiduciary obligations that venture capital firms and private equity firms have to their LPs. They can't be making up the numbers, and obviously once they go public, it's all revealed, right? There is an element of that as well, right? So I think that the need to go public is not there. If Databricks can go off and raise $10 billion like that, you don't need to go public. And one of the things I think is going to boom it boomed this year, but it's going to get bigger, exponentially bigger over time, is secondary market trading of LP positions in private firms. I think that stuff is going to get.
Have a look. It's very transparent already. And there's a website I use a lot called notice.co. Notice.co. And basically, the top 150 privates, you've got a share price graph for them these days, and a list of 14 brokers you can call if you want to buy the stock. If you're an accredited investor,
it's almost like a stock exchange, right? Like I've heard of this thing that they list the stocks and they call bid offers all the time.
Yeah. So guess what? And I spend quite a bit of the time. I've been monitoring Stripe against this basket of public payments companies, which I own right now. Guess what? Stripe ain't playing catch up in the private markets with some of the moves we've seen. In that, obviously,
but it is less liquid as well, Rupert. But Rupert, here's a good one. I have a client who has a stake in a secondary market private fund. So this fund only buys privates through secondary market transactions. Has outperformed a basket of its peer group by 20% this year.
Yeah, but there's a lot of times that they're providing
they're buying these stakes at a discount and then marking it up where everyone's pretending.
Yeah, there's weird things in those funds that are. It's not quite. Right. It's not quite the same.
All right, let's
no more private stuff. Let's talk about something. We're getting close to the end here. When does the internalization of customized chips at the likes of Amazon and Apple start to hurt Nvidia? We'll start with you, Paul.
Soonish.
Yeah.
Soonish. So there was a front page of the FT today. Microsoft buys 500,000 GPUs off Nvidia. That number is probably going to go down over time.
Okay.
Right now, it doesn't mean that other companies, whether it's a Baidu, whether it's a Tencent, whether it's a Mercado Libre, these sort of companies start to add to this list of things. But eventually, Google has the capacity to do this themselves. Amazon has the capacity to do this themselves. I think that the demand for GPUs is just going to be exponential because of AI. I think the talk of the infrastructure peak coming to an end is massively overstated. But eventually, Nvidia will be the biggest player, not the only player.
Okay, what do you think, Paul? Or sorry, Rupert. You know what? I lost you guys. I don't know if you guys saw me, but I froze there, and I'm desperately sending Daniel stuff and saying, you're gonna have to take over. And then I came back just for the end of Paul's comment. So Rupert, what do you think? Because I certainly don't have a clue what he said.
Well, I
wasn't that good.
Listen, I'll backtrack for you. I mean, Paul's still seeing a massive sort of exponential curve in terms of GPU demand. I'm reading stories that perhaps these models are improving at a slower rate, but actually my take on that is that is going to be a massive and blessed sigh of relief for the hyperscalers, because they can allow the revenue to catch up with the capex that they've been piling into in the last couple of years. But at the end of the day, what I find amazing is that whoever is designing these chips, they're all going to still get made in Taiwan by TSMC, and so everyone's just going to be queuing up for TSMC capacity, and yet that stock's hardly moved.
Kev, you want to do something fun? Angus and I on the weekend watched Terminator 2.
Yeah,
you watch that today with the lens of AI and everything that we've got in our minds, and you turn around and go, "That's so fucking scary."
All right, we'll finish with this one, and then I'll give you guys a chance to plug your stuff. Will Donald Trump announce that U.S. taxes can be paid in Bitcoin? Rupert, we'll start with you.
He might. I think it'd be a massive mistake for U.S. dollar hegemony.
You just understand, man. You haven't put in the time to understand. That's your problem. Put in the work, Rupert. Put in the work. Paul, what do you think?
My views are now public. I outed myself last weekend.
Yeah, okay, that's right. Paul,
Kev, do you think Bitcoin bros pay tax?
Yeah, that's a good point.
Who's going to do it?
Oh, that's a great point. Oh, well, we'll leave it on that note. Listen, it was a real pleasure having you both on. Why don't we start with you, Rupert? Why don't you tell people where they can find more about your letter and find out your negative Bitcoin views? Like, you actually were a brave man. You let me know. You're like, I'm going to actually go negative. I was like, you're braver than I.
No, I was just passive aggressively disinterested. Yeah, very different.
Is that what your wife says about you?
You can find me at blindsquirrelmacro.com, and I've got I write once or twice a week, and I've got a weekly podcast. About 40% of what I write is free, and the podcast is free, and that's on all of the platforms. So blindsquirrelmacro.com is where you start.
That's right. And so Rupert is a real swell guy. He actually does have a really good portion of his letter that he sends out for free. And I know a lot of people kind of do this and they put like a paragraph, and then you're kind of like, why are you wasting my, like my inbox with this crap? But Rupert's free stuff is well worth it. So if you haven't signed up, make sure you sign up for the free stuff and then have a look at the paid stuff. Now, Paul, you're a little different.
Try and cross the line eventually.
Yes, that's right. We got to get him in the first, Paul. I mean, Rupert, we got to get him into the door first, and then I'll let you make the final sale. Paul, you're geared more towards.
I don't do any social. So I have a little bit. I occasionally throw some stuff off on Substack. We're an institutional business only. So I do throw some stuff on Substack. Anyone who's interested in what we do, give your money to Rupert. He's better than.
But if you're an institution and you want to learn more about your calls, because like you really did, and I just want to stress this, Paul. There's been some people that have been bullish and they've had some reasons, but a lot of times it's just rah and kind of not very well thought out. You've consistently been bullish on the Mag 7. I remember having you on the show. It was an absolute fantastic call. You stayed with it. You didn't get shaken off. And I've got to just kudos to you, Ben. Like you're one of the few that's actually I've seen that's understood the AI and actually got ahead of it and made all sorts of dough. So good, well done.
Thank you, mate. No, that's very kind of you. If you're institutional oriented, we're on Bloomberg. Just Paul Krake, a view from the peak on Bloomberg. Kev, I get all my AI knowledge from watching Terminator 2. But right. I cannot tell you how well that movie is aged in what we're looking at today.
Okay, well, it was a pleasure having you both. Thank you for tuning in, folks. Everyone, have a happy holidays, Merry Christmas, and
thanks,
take care.
Kev. Merry Christmas,
everybody.
Thanks.
Happy holidays.
Happy Christmas.
All right, bye, everyone.
Take care.